Welcome back, everyone, to the Argentina Brief. Let's dive into what happened this week. We'll start with the economy. Argentina's September activity data came in hotter than expected and keeping the tally for the first 9 months of the year above 5% year over year. To be specific, that's the highest level since mid-2022, but there is a catch because if we strip out agriculture, mining, and finance, you're looking at 2% growth. On that note, the UIA chamber says industrial activity in Argentina is still 10% below pre-Milei levels, but the economic recovery is real and September saw a 0.5% uptick against August when everyone was expecting a drop. On the political front, Milei is moving fast post-elections. The government just held its May council meeting with business, union, and opposition leaders who are all making progress on consensus for labor, tax, and penal code reforms at upcoming extraordinary Congress sessions. With Milei's party controlling roughly a third of both chambers starting December 10th, the government has a very strong hand to work with. The Torquato Di Tella University Government Confidence Index jumped sharply in November, and the biggest surge came in Greater Buenos Aires, the traditional Peronist stronghold. Everything seems to suggest that the electoral scare has truly come and gone. The real estate sector is looking cautiously optimistic. Mortgage rates are still high, inflation pegged plus 6 to 13%, but interest rates are coming down. Banks need liquidity for long-term loans, and Argentina still lacks the securitization markets to make that happen. But Buenos Aires province just had its best October since 2000 for property transactions. Speaking of banks, 3 of the 4 US-listed Argentine lenders posted Q3 losses due to rate shocks and rising delinquency. Macro, Galicia, and Superviel were in the red, but analysts say this should be the floor for profitability, and 2026 is looking much brighter. Banks certainly have to get used to lending again in Argentina, having been so dependent on government bonds for income for so many years. The Argentine Football Association, AFA, suspended Estudiantes president Juan Sebastián Verón for 6 months after his team protested the sudden decision to award Rosario Central of Ángel Di María with a year-long title. That's something the former Chelsea and Lazio player says clubs were not consulted about. Milei has publicly backed Verón and snubbed the AFA president Claudio Tapia, and what all of this really highlights is a renewed push from Milei to allow private capital to flow into Argentine football, something the AFA president clearly opposes. Clubs can't be privately owned in Argentina, unlike what you see in countries in the region like Brazil, Uruguay, or Chile. But going back to markets and the economy, Argentina is facing a major challenge with the IMF going into its February review, almost certainly needing another waiver for missed reserve targets. The central bank needs to accumulate more than $12 billion by year-end, which analysts say is pretty much impossible. The government insists that they'll only accumulate dollars when peso demand recovers, but December brings conflicting pressures. Companies need pesos for aguinaldo payments, that's the 13-month bonus, but the strong peso is driving dollar demand for year-end travels to holidays in countries like Brazil. That's your Argentina brief. See you next week.